we think this is a shift to a new reality and price level for silver, meaning when you move out of this zone we've been in for 50 years, okay, and you go to $100, $200, you're not coming back to 50. You're going to live in a new range. Yeah, there will be sell-offs in that range, but the level has got to be sought out first. And frankly, you can look at a monetary degradation issue, like you mentioned, the money supply increase. Well, if you compensate for that, we'd be $200 easily. Silver's about to enter new reality, and we know its fundamentals. We don't focus on that, but we know that they've been tight for years. They get tighter. Industrial demand is continuing to rise because of solar and the solar cell stuff, and also AI is creating a lot of demand because silver in micro forms is used throughout the whole system, and yet supply is not increasing.
For almost 50 years, silver has been playing the same game, surging toward $50, getting slapped down, then spending years drifting sideways. Michael Oliver thinks that's about to end. He's been bullish since early 2016, when his long-term momentum models flipped positive right after silver's bear market low. That signal, he says, never reversed. In his view, we've quietly been in a bull market for nearly a decade, and now comes the acceleration phase, the moment when half the total price move happens in a matter of months. Oliver expects that surge to take silver to roughly $100 by the first quarter of next year, and if momentum really rips, $200 isn't impossible. It sounds wild, but his math checks out. If gold were to reach $8,000, silver trading at just 2% of gold's value would naturally land near $160. What he's really watching for is the breakout above that long-term ceiling around $50. Once that happens, he believes silver enters a new reality, a higher trading range where the old limits no longer apply. Pullbacks would still come, but the days of silver slipping back to $30 or $40 could be over. Oliver ties this setup to decades of currency debasement. Adjusting only to money supply growth, he argues silver should already be near $200. History backs him up. Commodities like copper, lead, and even beef spent decades trapped in flat ranges before suddenly repricing much higher, never looking back. Silver, he says, is sitting at that same point of tension just before the real breakout begins. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
We got bullish in February of 2016, two and a half months off the bear low. Annual momentum of gold and silver said, it's over, I'm going back up. Nothing has changed the annual momentum of gold and silver, very long-term trend metric, okay? Nothing has altered that view. So it's been an ongoing bull for 10 years, and we're now at the point, I think, where the acceleration phase, the dramatic phase, where half the move occurs in 6 months, is about to occur. And I think for silver, it's likely to take us at minimum, I'm talking like sometime in next quarter, first quarter of next year, to 100. And if, on the other hand, in the first 3 months, don't be shocked if this happens, meaning Octave dies, okay, if we get up near 100, then I think we're going to about 200. And
wow.
No, it's not insane.
Because, I mean, gold would be at, 5,000, 6,000 at that point.
Gold might be 8,000 by then, but if silver were 2% of $8,000 gold, let's say gold does the routine again, okay, 2% of that's 160. Is that right? Yeah, okay. I mean, you get the point. But also, when you look at the silver chart, it's very important because that log scale gold chart, I've got this red arrow going up over the 5 decades. It's been wave after wave, but higher and higher and higher. Silver, you could draw a line sideways through 1979, and we had 2 peaks at 50. We're only marginally out above that now. And so it's been caught in a 50-year range. We think this is a shift to a new reality and price level for silver, meaning when you move out of this zone we've been in for 50 years, okay, and you go to $100, $200, you're not coming back to 50. You're going to live in a new range. Yeah, there will be sell-offs in that range, but the level has got to be sought out first. And frankly, you can look at a monetary degradation issue, like you mentioned, the money supply increase. Well, if you compensate for that, we'd be $200 easily. Okay. But there's some other charts I've included too that sort of smack you in the face. The next set of charts that I sent is 3 simple, stupid commodities. Okay. These charts are all from the Federal Reserve of St. Louis, Fred. Okay. And one is the top chart is the price of lead. Okay. Going back to the late 1980s. In fact, you could go back to 1980, and you'll see that the first phase of that price action is the arrow on the left at a very low level. It just goes for decades sideways. It sort of looks like silver today, where it was in 1980, okay? But look what happened to lead. It just suddenly went boom and quadrupled in price, not because of a crop failure. Okay, we're talking a base metal here. Wheat can explode because of a crop problem, but a base metal doing this. And by the way, other metals did the same thing around that time. But it went to a new reality. And yes, then it dropped off again. But look at the new reality that's prevailed since then on the lead chart at a much higher level, horizontal for decades. Silver's still in the first range, okay? Then the second chart. Second chart's copper and copper products, as the Fed calls it. They incorporate products of copper. Same story. Multi-decade range at a given level. Then suddenly, within a matter of about 6 months, you move into a quantum, to a new level, and you go sideways again, but at a whole new reality of price. And now copper's at all-time new highs, above even the 2011 high, which silver has only just done. Okay. The bottom chart is beef. Okay. Pound of beef. Okay?
Oh.
Look at what it's done since.
Don't get me started.
No,
Go to your butcher.
It goes up in layers, and then it jolts, and then a new reality. Silver's about to enter that new reality, and we know its fundamentals. We don't focus on that, but we know that they've been tight for years. They get tighter. Industrial demand is continuing to rise because of solar and the solar cell stuff. And also AI is creating a lot of demand because silver in micro forms is used throughout the whole system. And yet supply is not increasing. In fact, silver has a unique attribute in that most of the silver that's mined does not come from silver miners, who are motivated, of course, by a rising price of silver. They come from people that mine magnesium or lead or zinc. So, it might be a marginal issue for them to increase silver production because, frankly, it's just a byproduct of their copper production, et cetera. So they're not motivated by rising prices. Silver has a unique fundamental game. The question is, when is it going to do it? We think it's begun.
Michael Oliver sees gold on a clear trajectory toward at least $8,500, maybe much higher. He looks back at the metal's history since private ownership became legal again in 1975 and notes a striking pattern: two major bull markets different in length but nearly identical in scale. Each delivered roughly an 8-fold gain from its bear market low to its peak. If that pattern holds, gold's 2015 low around $1,046 would project to about $8,000 on the next full cycle. And given today's backdrop, record debt, fiscal chaos, and relentless currency debasement, Oliver believes the coming move could easily surpass even that. But while he's bullish on gold, his eyes are on silver. Silver typically trails gold at the start of a bull market, then roars past it as momentum builds. That dynamic seems to be returning now. Silver has already started to outperform gold this year, even though it remains deeply undervalued. At roughly 1.125% of gold's price, it's trading far below its long-term average of 2%, and during past manias the ratio has shot as high as 3%. If gold does break toward $8,000, that same math would put silver's upside in the triple digits, marking the kind of move Oliver calls inevitable, not speculative. Let's get back to the interview.
I'm not sure where it's going, but I suspect there's one level it'll at least see, and that's 8,500 area on gold. Now, there's a couple charts I sent you. And the first chart shows a logarithmic scale, a ratio scale chart of gold going back to 2015, 1975, when the federal government allowed us to own gold again. Okay.
Yeah.
That was very nice of them. Anyway, we've had two major bull markets in that 50-year span with external conditions that are nowhere near the dynamite conditions we've got in terms of factors that could drive gold. Both were 8-fold moves in price, bear low to bull high. No matter what the price, the different duration trends. One was about 3 years, one was at 10, okay? But the moves were the same, 8-fold. Our bear market low, last one was $1,046, $1,050 in 2015. Okay, we're only halfway the dimension of the upside of those two prior bull moves. You can see it on the log scale chart at the top, which is the gold chart. If we were to match those two moves, just don't say we're going to do it again, okay? Good, 8,000 plus gold. Okay, now that's just compared to the old bull market peaks. Now, it may not stop there because these factors we're talking about are horrendous, especially government debt, not just here, but Japan, elsewhere. That game is yet to explode in terms of its real world consequences. My own personal assessment and portfolio is emphasis on silver now.
Okay.
Silver moves with gold, but it sometimes lags, sometimes outperforms. Usually it lags. Now, this year it hasn't. It's actually up more year to date than gold is, okay, by a couple digits, okay? So it's significant this year. But historically, it's still very low relative to gold. Like silver's trading at 1.125% the price of gold right now.
We do 80 to 1? Is it still 70
no, we
to
don't
1,
do it that way.
81?
We divide an ounce of silver into an ounce of gold, express it as a percent. And if you go back over that 50-year span of time, we don't show it here, but silver in 21 of those 50 years that we've had has at least been 2% of the price of an ounce of gold, minimum. And in bull trends, like 79 to 80, or we're in a bull trend now, right? Okay. Yeah. Or in 2010 and 11, silver was 3% or more the price of gold. So right now at 1.125, silver is very cheap relative to gold, but it's technicals of that spread relationship. And we study it, week by week, month by month, and we run momentum of the spread. Momentum is now breaking out. It's telling us the spread itself that is rising, favoring silver since the beginning of the year, or especially since April, since April, sharply. It still hasn't broken out on the spread, but the spread, you get above 1.31% to get bean counting for you. Yeah. And we're headed toward that level. You're going to blow out like a 3-year high on the spread, in which case you're going to go. You're going to rush. Why is that important? That is the prominent indicator back in the 1979 to 80 surge, this final 6 months of that move. Silver had already been going up for years, so had gold. But suddenly in in summer of 1979, that spread broke out of a situation it looks just like now. In other words, a potential breakout level, silver versus gold. It's at that point that the net price of silver, not just its relative performance, went boom off the page. I mean, it left gold behind. Gold was still rising, okay, but silver just went whoosh, okay. Exact same thing happened 2010. Like in September of 2010, silver had already been rising for years, so had gold. The spread broke out again. Said silver's, I'm back, okay. And by April of 2011, silver had gone from $28 to 50. From that point, we're at that cusp right now, where if you go through that level that I just mentioned, and
1.
we're nearing, 1.31. You get above that, there's a vacuum between you and 2%. And that's not necessarily resistance. That's just a level we've been at 20 of the past 50 years, okay? So it's hardly exciting to get there. Yeah. But that is enormous. So that's why I'm emphasizing silver, because I think silver is vastly undervalued. And you could even see it on the price chart I've got there.
For decades, silver has been the market's sleeping giant, rising in quick, breathtaking bursts only to retreat into years of silence. But the pattern seems to be fracturing. The forces that once capped its rise, monetary policy, paper market control, and investor hesitation, are starting to lose their grip. Both gold and silver are being revalued in real time as faith in currencies erodes and the global economy leans deeper into debt. What's striking is how these shifts aren't driven by speculation but by structure. Central banks hoarding gold, supply constraints tightening, and institutional money finally taking silver seriously. The setup feels more like a reckoning than a rally. Silver's ceiling may have been tested for half a century, but every compression builds energy, and this one's been building for a lifetime. Once it breaks, the move could redefine how we think about value itself, not as a number on a chart, but as a reflection of trust lost in the monetary system. When that moment comes, the question is whether investors will recognize silver's breakout as overdue justice for decades of suppression, or as the first sign that the old financial order is giving way to something entirely new. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.